special training, guys. This is definitely something that you want to go ahead and get your pens out and notebook pads out and really take some notes, guys, because you're definitely going to love this training. So with that being said, Drew, get on the mic. Drew, the mic is yours now, brother. Let's go.
Thank you, Sixto, and then shout out to everybody on the call right now. I see we have people from all over. I see Akron, Ohio, OKC. I see someone from Croatia, Vegas, California. So I do say thank you guys for being on this call. It says a lot about you taking your trading, trying to take your trading game to the next level. Because there's a lot of things you could be doing tonight, a lot of things that other people are doing, and people sitting around lounging, watching TV, or doing things that are not going to set them up financially for their future. But you guys are special ones because you took the time out to join this call because you want to learn a skill that you know for a fact is going to solidify your financial future. So shout out to all of you. Thank you. Honestly, you guys, I feel honored to be able to present to you guys. So, but yeah, what Sixto said is true. The past couple of weeks, just this week alone, I'm up 33.8% on my account. I haven't had a trading day underneath 80% in I think 2 weeks. Every day, constantly consistent with making gains. I haven't had a losing day in about 2 weeks. And I wanted to take the opportunity to share what I've been, learning and what I've been using. Take this opportunity to share it with you guys too, to see if it would be helpful to you. So basically what we'll be going over, and I'll share my screen right now, is basic market structure and some candlestick patterns. So let me go ahead and share. We'll get into it. Everybody can hear me? If you can hear me, please type 1 in the chat.
Sheesh, Drew.
Okay.
Oh
my fees. I didn't even know you were on the call, man. It's now I gotta really step my game up now. The pressure's on.
Sheesh, did you guys hear those numbers, bro? Oh my God, I'm taking notes, bro. I'm taking notes. Let's go.
Yeah. So this is basic understanding of market structure. Now we want to identify the market and candlestick patterns that help us win trades. That's what we're here for. We're here to make money. We're here to win trades. So here we go. Let's get into it. First of all, why do I need to know this? Before we even start, we have to make sure it's important to us. Why do I need to know this? It is because winning trades are placed at high predictive values. Market and candlestick patterns are backed by research for decades to have high predictive value. And when you take trades with high predictiveness, you have a high probability of winning. And that's the whole point of trading, is to place trades, make entries into the market where you have the highest probability of winning. This is why my win rate is so high, because I am extremely picky when it comes to taking entry points, because I want the highest probability of winning. So this is what this is for. This is why this is important to add to your trading arsenal. I know we're all using indicators. We have our different, our moving average lines. We may be using cash trap. We may be using somebody else's strategy. But overall, as a trader, to be a wholesome trader, we still need to know fundamentals as market structure and candlestick patterns. So no matter what indicators you use or who you follow, as a trader, it should be in your fundamental tool belt to know market structure and candlestick patterns. So let's identify some market patterns. There's 2 basic ones. Reversal patterns and continuation patterns. Reversal patterns, meaning that the way that the market is going is literally going to reverse and go the opposite way. Or continuation, meaning the way that the market is going, it's going to do something and then continue in that same trend, or that same, we'll say phase, market phase. So either reversal or continuation. So we'll start first with some reversal patterns. First one. Remember, I want to give obviously let you guys know, this is backed by, there's a study done of over 200,000 market patterns over a decade, over 10 years. And after they evaluated, and had to have a full completion of each pattern, which ones were the most highest probability to complete the pattern, which ones are most accurate when they appear on the charts. So this reversal pattern you see here is statistically in that study the most accurate of price action patterns. It's 83% accurate. It's called a head and shoulders. And what we're looking for in a head and shoulders, you can see my mouse here. As you see, you have a left shoulder, you have a head here as a higher top than the left shoulder, and then you have a right shoulder which should be somewhat even with and the same level as the left shoulder. So they don't exactly have to be the exact same price, but the closer they are in price, the better, the stronger the pattern. So this pattern gets completed. You have this neckline that you draw across. If it's a head and shoulders, you draw this neckline across the lows that come down off of his shoulders. Across. If it's inverted, then here you draw the neckline across what would be considered the highs off of the shoulders. So you have left shoulder, right shoulder, head here, right? So when this head and shoulders is completed, this price will reverse down. The trend will come up this way, make the left shoulder, form the head, make the right shoulder, and then you're entering when this price breaks the neckline of that right shoulder coming down. And on the opposite, in the inverted head and shoulders, price is declining. It forms its left shoulder, coming up, making a high here, coming down lower than the left shoulder, making a high on the same level, and then coming down and breaking this neckline formed by these two highs, and then reversing and forming an uptrend. So that is a head and shoulders, 83% accuracy, guys. We want to have the highest probability of winning, 83% accurate. When you see this pattern, if you see it and recognize it, you know where to get in at the neckline. In the next slide, you'll be able to see something to also give you some different options. Because this is accurate, because it's, when you see this, you have to jump on this or jump in this, give you some different options, give you a couple different looks at what happens, right? So let's say the head and shoulder form, right? Shoulder forms, head forms, the right shoulder forms, boom, we start to break out the neckline. But what happens if it pulls back up to the neckline? You can start to retest. What happens if it never breaks the neckline? Or, like here, you wait for the bounce and buy. Or what happens if it breaks the neckline and then reverses back up? You can still take a buy of the neckline. Instead of taking the sell on the retest, if it breaks it, then you can take a buy. So just to give you a couple of different looks so that we have more than just, kind of like a one-dimensional view of the head and shoulders. You give you a few options so that when you see this, and you see some things that may not go this way, textbook every time, you can know exactly what you can do. So here's how it looks on the chart. You see left shoulder with the actual candlesticks, shoulder formed, head is formed, shoulder is formed, it breaks, you get in the neckline, it comes down. So that's head and shoulders. We'll move next to the next one, the triple bottom and triple top. 80% pattern completion accuracy. So what you'll see here is you'll see an uptrend on the triple top, touch one, touch two, touch three, triple top, and then come down past the break. You can also call this somewhat of a neckline. It makes more sense in head and shoulders because you have head, shoulders, you have a neckline, right? But in the triple top, I'm going to call this a neckline or a swing low point. When it breaks down past that, you can know that the price is going to reverse. When you see this pattern, touch one, touch two, touch three, you see it's forming a strong resistance or rejection off of this level. You probably see this in the markets all the time. But now you know you have a triple top reversal. Same thing with triple bottom, forming a strong resistance or support right here. Support here at the bottom. Touch one, touch two, touch three, reverse. It's not breaking this. Reverse back up. You see it on the charts. A candlestick, you see the first one, level one, touch one. Second top, touch two. Third top, wick, but still, touch three. And then let's see what happens. You see it called a neckline or a swing low, or then swing bottom, then it breaks this point, boom, we enter, catch our win. High probability because it's a high probability pattern. It's a high statistical accuracy, high probability trade, a high chance of winning, and that's what we want. So just like the triple top, it may not touch three times, it may touch two. So let's call it a double top, or on the low end, double bottom. 75 to 78% accuracy, still good. So you have same thing as a triple top, except only two touches. So if you understand triple top, very easy to understand double top and double bottom. It's the same idea. Trend comes up, touch one, touch two, reverse back down. Double bottom, downtrend, hits the support, touch one, touch two, the swing high point. Once it breaks, we enter for the reverse. reversal. It will not break it does not break this line. So if you understand double and triple top, double, triple bottom, you can look out for these in the market and then make your entries accordingly. And here's how it looks on the candlestick chart. Price comes up in a trend, pretty strong trend. First peak, reverses back, forms a low. Boom, second peak, almost in the same level. Comes back down, breaks this neckline right here from the low here that was formed here. Straight across, we enter in, catch a win. So those are reversal patterns. Just a few of them. There's many other reversal patterns. I just want to show you, based on the research, what were the most high probability, high statistical accuracy for completion. Because we want high probability trades so we can have a high win rate. So those are a few reversal patterns. So now we'll take a look at a few continuation patterns, meaning that the market is moving in a certain direction, and then you'll see these type of patterns, and then the market will continue to move in that direction. But first, it will go through this type of phase. So what do we got? Descending channels, descending channels. Another high completion accuracy, 73%. So this descending channel here, you have a bullish trend, an uptrend, and then you have different lows and highs are being created, almost kind of like a consolidation, but going down. So almost like a consolidated, like almost downtrend, right? It's ranging in here, but forming lower highs, right? And then also lower lows. So it's on a downtrend for a little bit, but still ranging inside this channel. That's why I call it channel. So this pattern gets completed when this price breaks through this upward trend line right here of an ascent, or it breaks through this upper trend line of the descending channel. It'll break down here, through the bottom trend line of the ascending channel and continue its pattern. This one came through an uptrend. It has a descending channel and will continue at this break point into the uptrend. This one comes down in a downtrend, goes through the channel, and then breaks through the bottom of that bottom trend line and will continue down in the downtrend. Let's see how it looks on the chart. You have your candlesticks come up, strong trend coming up. You have a very strong channel comes here, and then you see this channel range up, boom, touch, touch. You see it ranging in here, boom, 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 and it breaks up. So on this one, we're looking for this line right here. Draw this line straight across. We enter here, we catch some wins going up, and the continuation of the pattern. Other one, ascending and descending triangles. 73% completion accuracy, defined by, well, we have an uptrend, strong uptrend or bullish trend, bullish move, and it's followed by two or more equal highs or series of higher lows for an ascending triangle. So what we're saying is, here you see this top is flat, but the lows are getting higher. So it's creating this strong resistance here, creating this range here, this resistance here, but these lows are getting higher. So when you see these lows getting higher, you can kind of think to yourself, well, this price, if the lows are getting lower, then you may think, it has potential to go down. But when these lows are getting higher, it's usually a strong sign that this is a great continue. Even though these highs aren't getting higher, because the lows are getting higher, it means not as much selling pressure forcing the price down. So when you have weaker selling pressure, creating higher lows, pushing this price higher, then you can see the continuation from the previous bull trend here before the ascending triangle. And the pattern continues. So you enter that as soon as it breaks out, you create this range here, create this resistance here, and as soon as it breaks this, you catch a buy and take a win. Descending triangle, price is descending, has a bearish move. It creates now on the bottom side a support touch, and now you see lower highs. See, high here, lower high, breaks through our support, and we catch a sell as the price continues down. So this would be this ascending triangle here. You see the strong uptrend, starts to make this range, pushes back down, comes up to that same point, test that, comes back down, test it again, and on this third test here, it breaks through. It continues its uptrend. As an ascending triangle right there. Another one that's pretty common, bull and bear flags. So we see this a lot. 67% pattern completion accuracy. Usually occurs, we like to see what's called a flagpole, meaning it's a very more vertical movement. If it's a bull flag, then you see a vertical movement in price, sharp rise in price. You see some banker candles, or over here in the bear flag, you see very vertical downward, falling off a cliff movement, right? Very strong trend movement, like a flag, right? So here you see the flag, strong flagpole here. This area, tight ranges. Unlike the channel, you have more wider ranges. But in this flag, we have a little bit tighter ranges. That's why rapid series of lower highs and then lower lows. It's almost like a downtrend, but it does continue. Very similar to the channel, but a little bit tighter ranges in here. So if you understand channels, you can also understand about the flag pattern too. So we're looking for that sharp flag pull up, sharp rise in the bull flag created, and then also creating this range in here, tight range, and then continuation once the pattern breaks the upper trend line of a bull flag, and then the opposite respectively for the bear flag. Strong flag pull down, tight range, breaks this point here, and then continues down. And that'd be the completion of that trend. So like I said, we can't go through all the different patterns, but we want to go through the most high probability ones based on numbers, based on logic, based on research of the market. So you can see here, really strong flag pull, sharp incline up, tight range in here. It breaks and continues up. And the same thing opposite here, bearish is GBP USD. It's a daily chart, but still, you can see the pattern. Strong flag pull down, tight range. Breaks our point, continues down. So channel flag you can look for, very similar. Just flag is a little bit tighter in this range area than the channel. So is anybody, as far as these market patterns, before we move to candlestick patterns, does anybody have any quick questions? Probably have like 2 minutes for.
Next, the voting machine company targeted by Trump.
Yes, I have a question on your bearish and bullish flags. When it breaks, do you wait for the retest on the other screen, the next screen that you showed?
Right here.
Yeah, so do you wait till the retest
Yeah, you see this
and then get in?
You can. When it breaks, it's a good place to get in. On the retest, you see how it wicked up here, but it still did not close above that, right? So this is true. So, like I said, this is 67% pattern completion accuracy. Like a lot of these patterns may have a retest, but we want to. That's why I show these patterns, because high probability wise, it ends up completing the way it does textbook style. But in the case of a retest here, it wouldn't be too much to say that it'd be good to enter. You have a higher probability that it will continue to complete the trend as opposed to going the opposite way with these specific trends. Obviously, because it's 67%, it's a little bit lower than like a triple top or a double top, lower than a head and shoulders, but it's still a very high probability that will complete it. So yeah, if you catch on the retest, I wouldn't say that would be a bad thing to do. Is that a good answer?
Yes.
Okay.
Yes, thanks.
Maybe take one more question before we move on to candlestick patterns, if anybody has any.
What was the name of the one that was 70% accuracy again?
70, yeah, see 73. Let me know if you see it. I have triangle, descending.
I think it was one of the channels.
Channels?
Ascending, that was it. That's what I wanted to know. I needed to know the name. Thank you.
No problem. Anybody has any questions about the boxes that are there? I have no idea why they were showing up. I don't. They didn't show up on on my test run, but
And why are they there?
does anybody else have any question? All right. So move on to candlestick patterns. So again, very similar. We have reversal and we have continuation patterns, right? So most of these will be reversal patterns that we're going to see, reversal candlestick patterns. So we'll start with some basic ones. The bullish and bearish engulfing. So for the bullish one, you'll see a strong downtrend, a bullish trend. You'll see a bearish trend first. Then you'll see a short red candle at the bottom of this bearish trend. And you'll see a bullish engulfing candle, green candle, fully engulfing the bottom, the lowest point of this bearish trend. Fully engulf it. So you may ask yourself, then where do we get in? Do we get in right here? No, this is just a sign. This has potential. This is a signal. This is a signal that it has potential to reverse. It is not a confirmation. The confirmation candle is the next candle. It's this one. This is a stronger confirmation that it'll reverse. Also, when you align this with your stochastic, with your RSI, with your DMI, with your indicators that revolve around, that type of trending, then you can, when you line all those up, then you can see when you have all the confirmation from your momentum, then, yeah, you can get in out this confirmation candle. Same thing with bearish. You have a strong bullish trend. At the top of the bullish trend, you have the short green candle. Then you have a red engulfing, completely engulfing the green candle, reversing the trend. But like I said, this is not the confirmation. The next candle is a confirmation. Because if this goes green, then we can't say that it's as high of a probability to reverse as it is if it would have this confirmation candle here. Another red, strong body red candle, large body red candle. So bullish and bearish engulfing, when you look for these engulfing candles, you usually find them at the tops. You just find this engulfing candle at the top of a strong bullish trend right before reversal, or at the bottom of a bearish trend right before reversal into a bullish. So another two more, hammer and then shooting star patterns. So for the hammer, you'll see a strong bearish trend, and you'll see this candle here with a short body but a very long wick. So for this one, there was selling pressure here. That's why you see this wick. There was pressure to push this price down, but there was also stronger buying pressure to not let it close down here, pushing it back up to a short body, a short close, and then confirmation candle right next to it, just like we saw the engulfing. This gives us confirmation. And like I said, please align this with your momentum indicators, your RSI, your stochastic. If you're use a MACD, whatever you use this confirmation candle along with your indicators to signify a higher probability of reversal. So that's the hammer. Why? Because it looks like a hammer. You have the head and you have the handle here. On the opposite end, you have shooting star. Strong bullish trend up, long wick means that we had buying pressure, but we had also strong selling pressure pushing this into a short body confirmation sell candle here. And then, please align it with your indicators and then take a sell, take a win. Hanging man inverse hammer. Similar to the hammer, but so you have a short body still with a long wick, but this time it's pointing downwards towards the trend. Before we had pressure, if it was coming up into a strong bullish trend, you had buying pressure. But here, we had stronger selling pressure, but we also had strong buying pressure. So you had the short body candle here, but instead of having the over buying pressure up here, you had the selling pressure. So then you have the confirmation candle right next to it, boom, tells us it's gonna go. We get in at the close of this confirmation candle and we take a win. In the opposite end, we have a bearish trend coming down, prices dropping. At the bottom, we have the inverse hammer, upside down hammer. Wick pointing upwards towards the reversal, signifying buying pressure to reverse the trend. Confirmation candle, or buy candle, green candle, nice body on the green candle. We get in at the close of this confirmation candle, along with the confirmation from our momentum indicators, RSI, stochastic, DMI, MACD, whatever we use, and then we take a win with the trend or on the reversal. Call it the hanging man, call it the here, inverse hammer at the bottom here. Another candlestick reversal pattern, evening and morning star. So this one, unlike the other ones, is before we had a candle that would tell us that there is the potential to reverse, and then next to it was a confirmation candle. This one, or these two specifically, morning star and evening star, have 3 candles. It's a 3 candlestick pattern. So for the evening star, you have this bullish trend up, and what makes this pattern is you have a nice large body buy candle here, followed by a short body but wicked buy candle here, and then followed by a very large sell candle at the top. So this evening star has this large green candle followed by a short green candle at the peak of this bullish move, and then completed with a large red candle. So the strength of this pattern, it increases. When this third candle, the more this price is reversed, the stronger this pattern is. And of course, if you get another candle, you can almost bet that this price is going to reverse at some point. Maybe take it on this pullback here, but this is definitely a very strong reversal candlestick pattern here. And then the morning star, the opposite, strong downtrend. You have this large red candle, sell candle, boom. Short sell candle with some wick, almost even wick here. And then we have a large green reversal candle. So this 3 candle pattern, and then price reverse. Come up here. And like I said, the more this price reverses, the more this candle reverses back even over, this, then you have a stronger, you kind of have like a higher probability this will reverse back up. Maybe be careful if it's a shorter body candle, maybe not take that, but you want to see this nice large body on this third candle here, and same thing for the evening star over here. So just look out for that. Just make sure you're actually recognizing the pattern as it should be, not trying to overextend it by your imagination. Okay, so far we've seen morning star, evening star, bullish engulfing, bearish engulfing. The hanging man, inverse hammer. So let's see some other ones. This is kind of more like a neutral candle. It's called a doji. So this is what happens when the candles open and close are almost the same price point. So the body's either very short, maybe non-existent. It looks like, if you look on a chart, it looks like a flat line, like a horizontal little line, like a tick, like a dash, with maybe even wicks. So this shows a little bit of struggle between buyers and sellers, that there's no overpowerment of either the buyer side or the sell side to drive the price in either direction. It's kind of like a stalemate. So when it's alone, it's kind of like a neutral signal. It means like there's some hesitancy or some like conflict in the market. He's going to determine which way that market goes. So maybe just wait. No decision to be made yet. But maybe a doji found at the top of an uptrend, like we saw in the evening star. Maybe find doji at the top of the evening star, and then you see this strong reversal candle with the large body sell candle here. Then that doji might signify a time for a reversal after you get the confirmation. Like I said, please pay attention to all these things. Please pay attention to the market structure, the candlestick patterns, and also, of course, your indicators that you're using. All these put together make for a really nice picture, and overall, it gives you the full picture of the trade to take, where to get in, where to get an entry point is extremely important. So then also the same thing opposite, if it's found at the bottom of doji, like the morning star here, then just wait to see what that next candle does, right? So as you see it happening, you're seeing this trend come down. Maybe you started watching the market here. You're seeing the strong trend come down. You see a little pullback here, a long red candle. You see this doji. You can start thinking to yourself, okay, maybe this may form some type of morning star pattern. You just wait. So whether you're watching a 5-minute chart, a 3-minute chart, whatever you're watching, maybe this next 5-minute, 3-minute candle pops up. Okay, now I can recognize this pattern as a morning star, right? And you know what to do. You know that it's a very high probability that this price is going to reverse somewhere. So you can catch maybe some buys going up this way. And the same thing for evening star, catch some sells going down the opposite way. So, like I said, none of these are 100%, but by recognizing these and aligning them with your indicators and seeing the full market structure, you're giving yourself the highest probability to win. So there won't be many times where it goes against you, or many times in a row it goes against you if you put it all together, your indicators, the market structure, and the candlestick patterns together. Sometimes you see this in consolidation around lunchtime, when the market just goes flat, starts to come slow. You see these spinning tops, just doji after doji, flat line, flat line, flat line, flat line. No real price movement, no price action really happening. Like I said, no meaningful change. Maybe buyers, not really much buying power, seller, not much selling power, or just everybody went to lunch, no one's placing large orders. So you see these spinning tops, just straight line. So at that point, it's a consolidation. The market will move at some point, but it's hard to tell which way. So it's better just to kind of wait till you see actual identifiable market pattern or candlestick pattern that's happening. Look at your levels, look at your support and resistances, look at historical support and resistances that you have, and then make a decision there. But just so you know what this is and what it's called, a spinning top. It's just a time frame that not really much to do. So if you see this, maybe move on to another pair, come back to it later. But just so you know what this is, then spinning top. So that is the basic understanding of market structure according to the research that proves the most accurate patterns that are out there over the past 10 years, and some of the candlestick patterns you'll see in the market on the daily. If you have any questions, please feel free to ask. But I hope that you recognize these as you're trading, whatever you're using, Cash Trap, or if you're trading on your own, or you're still following or getting on Go Live when you get on your Go Live sessions. But you'll start to see the story of the market as it's forming, and then you'll have patience as candlesticks are starting to close, thinking to yourself, this may form this type of pattern, so let me wait so I know exactly where to get in. So we become more educated based off of the candlestick patterns and the market structure that's happening as we're seeing it before it happens, or at least having in the back of our mind what could happen. And then knowing and being educated to know, well, if this does happen, I know exactly what to do and where to get in at. So as a trader, it's like one of the best feelings in the world to know what the options for the market, what the options that the market could do, and then no matter what it does, and you see it, what you can do to take a win. So that is the basic understanding of market structure and candlestick patterns. I think this call is only supposed to go an hour, so we have some time for questions. I don't know if Sixto wants to say anything or anything.
I gotta say something real quick, bro. Guys, was that not one of the best trainings ever? Explained the most clear, concise, simple to understand way. Drew, that was one of the best trainings ever, man. I'm so fired up just off that training, man, because I've been in the academy way longer than you have, bro, and no one explained it to me like you just did. You just explained it better to me than anybody in the academy has done. You guys, please, did you get a lot of value? If you guys got good value from Drew, you love what Drew did, we appreciate you so much. Drop some 222s in the chat box. Guys, let's show this man some massive love. You guys, I don't know if you guys were in the same training I was, but that was incredible, Drew. And this was your first training, bro. I'm blown away. We need you training day and night, man. Everybody's going to be millionaires off of exactly what you're teaching. Your team in particular, bro, has gonna get a lot of value by having a great leader like yourself, bro. I mean, man, I could just imagine if I was getting started with you and you teaching me how to play this game, I would blow this up. Guys, let's do Drew something big. Let's show our boy some love. Everybody take a picture of Drew right now on your phone and go to I Am Elite Discussions, go to Fast to Freedom, and drop a thank you for Drew, okay, for doing this training. Let's let everybody know, because a lot of people, the 43 of us, and by the way, for your first training, 43 people, Drew, correct. Crazy, man. But if 43 people, only us got a chance to experience this live and interacting with you. I'm just blown away. I apologize, you guys. I just am so excited. Hands up to you, bro. If this was a crowd, we'd all be standing, we'd be clapping our hands, man, because that was incredible, bro. Shout out to you, man. I just wanted to say thank you for doing this training, man, and we look forward to more.
Yeah, that was the most important thing to me, was to make sure that I could provide value, that you felt that at the end of this, that it was worth it for you to, take this time aside to come here, as opposed to feeling regretful after, like, oh, I should, went to Walmart or something like that. So I hope that you all got at least something out of it, and I hope that